Inflation, just hearing the word makes your gut twist, right? You pour your hard-earned capital into dividend growth stocks because they're supposed to be your safe haven, your paycheck that keeps pace with life's rising costs. But then inflation sneaks up like a thief in the night, slowly eroding the real value of those dividends. And suddenly, it's not so safe anymore. The frustration of watching your portfolio's apparent growth get swallowed whole by rising prices. It's maddening. You're playing a high-stakes game where the rules change every quarter and the market doesn't care about your plans. It just grinds you down if you're not sharp. So, how do you stop getting blindsided? How do you actually beat inflation, not just survive it, but win over it? First, forget any notion that all dividend stocks are created equal in this war. It's a lie waiting to trap you. Dividend growth stocks can be rock solid, sure, but if they're tied to companies that can't flex their pricing power, you're toast. When inflation ramps up, only businesses that can push prices and keep customers paying can actually grow dividends in real terms. That means dumping those cozy utilities or slow-moving consumer staples that get squeezed or frozen by rising costs. You need companies with strong brands, pricing agility, and dominant market positions. Think about fintech firms redefining transactions, software as a service, businesses with recurring revenue locked in contracts that adjust prices, or commodity exporters who benefit from raw material inflation. Find the firms that don't just react, they dictate terms. Second, get brutal with your dividend growth rates. It's not enough that dividends go up every year. The pace matters. If inflation is running at 6% and your dividend grows 3%, you're losing 3% buying power yearly. Tracking dividend champs with consistent 8 to 10% growth nestled in industries that can maintain margins despite inflation, that's your real playground. And if you spot dividend increases lagging for 2 quarters, start cutting. Don't get sentimental. These signals are your early warnings. It's a different game from chasing yield alone. Yield traps lurk where dividends look juicy but can't keep pace with inflation. Third, think global and sector diverse. Inflation isn't uniform. Some countries face crushing inflation, others hold it tight. Emerging markets might be volatile, but local companies sometimes have better pricing dynamics or export advantages that domestic giants don't. Sector-wise, commodities, energy, and select tech can outrun inflation, but banks and lenders face more complex pressures. Don't throw all your eggs in one inflation basket. Spread smartly and identify where dividend growth is sustainable, not just baked in. Fourth, inflation affects cost of capital and debt service. Many dividend payers carry debt, and higher interest rates can squeeze their free cash flow, choking dividend potential. Dive into balance sheets like a hawk. Prioritize companies with strong cash flows, manageable debt loads, and a track record of navigating rate hikes. This means no flattering glossy reports, read between the lines. Cash flow consistency beats accounting earnings every day. If a firm can't manage rising debt costs while growing dividends, you know the score. Finally, don't just sit on your hands. Inflation cycles don't wait. You have to react swiftly but wisely. Rebalance portfolios frequently, trim names that slip on dividend growth or margin pressure, and add agile companies that not only survive inflation, they exploit it. Use data smartly. If you wait for headlines, you're behind. Predict trends using economic signals, supply chain insights, and company earnings calls. Be proactive. Predict and act before the market adjusts pricing. This isn't just about defending wealth, this is about pushing your capital to outgrow a system designed to make you complacent and small. Dividend growth is a weapon, but only if it's wielded with precision and unflinching discipline. Inflation isn't your enemy if you know how to turn it to your advantage. So build that portfolio with ruthless selectivity, track every dividend growth percent like it's your lifeline, assess debt like cash is your oxygen, and never settle for less than dividend growth that beats inflation by a mile. Doing less means losing ground. Doing this means owning your financial future while others scramble behind illusions. This is the battlefield where winners separate themselves from the herd. The question isn't if inflation will cut your returns, it's how badly, and whether you're ready to meet that head on every damn day. Subscribe to our YouTube channel and check the featured link to learn more.